Hi guys, welcome to CA Quick Bites, and today we'll going to revise CARO 2020, and we'll straightforward study from this MCA PDF to get the better text understanding. Perfect. Let's jump on to the page number 6 because 1 to 5 contains Hindi part that we'd not be considering while revising. Here we go. Yeah. Ministry of Corporate Affairs Order, New Delhi, 25th February 2020. In exercise of the powers confirmed by the subsection 11 of the section 143 of the Companies Act and in supersession of the Companies Auditor Report Order 2016, the published in Gazette of India, Central Government is issuing this particular order by the consultation with the National Financial Reporting Authority constituted under the section 132 of the Companies Act. Right? We'll study applicability first, so that to understand where an auditor need to issue this report. It shall apply to every company including a foreign company as defined in clause 42 of the section 2 of the Companies Act, right? So it will be applicable to all the companies including the foreign companies. Here there is an exception. 5 exceptions are given out there. First one is the banking company, second one is the insurance company, third one is a section 8 company. You all know section 8 companies are charitable objective companies, NGOs. Basically the companies engaged in the work of NGOs, same as like the one-person company and the private limited company. The fifth point is a tricky point, that it contains some 2-3 combination of 2-3 uh, you know points. Private limited company which not being a subsidiary or a holding of the company of a public company, right? The first one is the there should be a private company, right? And it should not be a subsidiary or holding of any public company. Okay, if it is satisfied that, then we'll look the other condition, having a paid up capital and reserve and surplus not more than 1 crore rupee as on the balance sheet date. Here we need to consider this particular thing, balance sheet date, right? So we need to check this limit on the balance sheet date. Even in the case the ICA gave the MCU case study based on the this particular, and gives you some balance sheet and adjustment. You need to just calculate these figures on the balance sheet, right? And here you need to be little careful because these limits are need to be checked out individually. These need to be these all of the limit need to be checked, and there is no or, these and mentioned over there. So these all conditions need to be fulfilled to not cover in CARO, right? To get an exception, you need to completely you need to completely follow these you fulfill these points. Otherwise, if any of the point you will not fulfill, then the CARO will be applicable on you, right? And let's go forward. And which does not have the total borrowings exceeding 1 crore rupee from any bank at any point of time during the financial year, which does not have total revenue as disclosed in Schedule 3 of the Companies Act, including, here is important part, including revenue from discontinuing operations exceeding 10 crores during the financial year as per the financial statement, right? So if any private limited company, first it should not be a subsidiary holding of the public company, and it should not exceed the paid up share capital more than 1 crore, and the total borrowing should not exceed 1 crore. Does not have total borrowing exceeding, right? And does not have a total revenue disclosed in Schedule 3 more than exceeding 10 crore rupees, right? So if all of the conditions get followed, it gets an exception from following the CARO, right? Point number 2 says that the point number 3, the paragraph 3 and 4 contains the details which the auditor need to be mentioning in its reports, in the case CARO get applicable on that particular company which is being audited by the new auditor, right? And one thing is there, provided this order shall not be applied to the auditor report on consolidated financial statement. See, CARO is applicable on the separate financial statement. It is not applicable on consolidated financial statement, right? Let's move forward to the point number 3, which contains the matters of the CARO, which this is a main important point, right? You'll get the questions from the point number 3 only. And applicability. First one is the first point is about PPE. So whether it company maintaining a proper records and showing full details of the PPE, whether company is maintaining proper records, whether the property plant equipment have been physically verified by the company and at reasonable intervals, right? So it's a reasonable interval. Sometimes questions get asked like what is the reasonable intervals in while carrying out the physical PV of the stock or something, PPE, whatever. So it is a it's a judgment. It's basically based on the past assumption. You can't specify that what is the reasonable interval. Whether any material discrepancy are noticed on the verification, like is there any changes or any discrepancy being noticed while verification, and if so, well, it will same has been properly dealt in the books of accounts, right? Is there any abnormal loss or like any of the things which happened extraordinary, ordinary, whatever, that should be properly dealt in the books of account. The proper accounting treatment has been given to that. Point number C says the whether title of deed of immovable property other than properties where the company is in the lessee and the lease agreement are duly executed in favor of lessee. Disclose the statement, disclose in the financial statement as in the name of the company. If not, provide the details, right? So like we need to give the details of all of the lease. In the case of companies lessee, so we need to provide all the details over there. And in the case of lease of the immovable property, we need to provide everything, and we need to check that particularly. Whether the company has revalued the property, plant, equipment, including right of use of asset or intangible assets or both during the year, if whether the revaluation is done. So see, if in the case the revaluation is done, company is following a revaluation approach, and if it is doing the revaluation and it should be done by the registered valuer, right? And in the case there is a change in the value of the carrying amount and the revalued figure, and the change is more than 10%, you need to specify that change, right? Specify. Oh, yeah. Whether any proceeding has been initiated or pending against the company for holding any of the uh, Benami property, right? And like there, and whether the company has appropriately disclosed the details in the financial statement, right? We need to check that. Whether the second point, whether the physical verification of inventory, the second point deals with the inventory, whether the physical verification of inventory has been conducted at reasonable intervals, and if any discrepancy of more than 10% need to be specified, need to be specified and to properly deal with the in the books of accounts. Whether that during any point of time company has been sanctioned working capital limit in excess of 5 crores in aggregate from the bank or financial institution on the basis of the security of current asset, whether the quarterly returns statement filed by the company in such bank to with such bank and the institution. So we need to check that in any point of time, in any period, is there any working capital more than the 5 crore rupees being sanctioned on the basis of current asset, and whether these are quarterly returns being statements of stock or whatever it is, the current assets, the statement of current asset, statement of working capital, statement of projected sales, whatever they ask, the bank ask, being filed by the company with such banks, right? If not, give the details. Perfect. Let's come to third point, whether during the year the company has made investment in providing any guarantee or security or loan, or granted any loan advance in the nature of loan secured unsecured to companies, firm, limited liability partnership or any other party. If so, whether during the year company has provided loans or provided advance in the nature of loans and or stood guarantee and provided security to any of the entity, with the aggregate amount of during the year balance outstanding at the balance sheet date with respect to such loans, advance, guarantee, or security, subsidiary, joint venture, and associates. So aggregate amount during the year balance outstanding at the balance sheet date with respect of such loans or advance, guarantee, security to parties other than subsidiary, joint venture, and associates. We need to just specify these, the aggregate amounts. Whether the investment made guarantee provided security given and the terms and condition of all grants, loans which are in the nature of loans and guarantee provided are not prejudicial to the company's interest. So see, if the company has provided any, any of the loan or whatever it is, and the then the interest rate is like quite lower than the bank rate, like the government rate. So it is a prejudicial company, prejudicial term to the company. Like it will, harm the financial interest of the company. So there should be nothing in the terms and condition of the loan provided, or any guarantee given, or any investment made, which provides, any harm to the company in any manner. Like I'll give you one more example. In the case if there is suppose there are investment done by the company, and the investment is providing a return which is lower than the government rate of return. See, government rate of return is the lowest rate of return sometimes, and like you're not supposed to invest the money lower than the which is providing the return lower than the government rate of rate of return. So like in the case company has done that investment, so it is prejudicial to the company's interest, or will say detrimental to the company's interest, which will harm the financial interest of the company. In respect of loans, advances in the nature of loans, whether schedule of repayment, principal, payment of interest has been stipulated, whether the repayment or receipts are regular. So see, we need to check that if the company has given the loans and advances, and is there any schedule of repayment, like we used to make in the financial instruments 109, the schedule of repayment has been stipulated, and whether the repayment or the receipts are regular. So if we are receiving the repayment and receipts regularly, if the amount is overdue, state the total amount for more than 90 days. If there is an amount being called and it is not being provided in next 90 days, so it is overdue for more than 90 days, whether the reasonable steps has been taken by the company for the recovery of that principal or interest, right? Whether any loan and advances in the nature of the like loan granted which hasn't fallen due during the year has been renewed, extended, or fresh loan to settle the overdue. Like sometimes we do, you must have that, uh, seen that compromise thing. So sometimes companies, what they do, like they not able to uh, like make payment, make repayment on the scheduled date, and they just come to us, like come to company, and they just say like we'll like to change some modification, we want some modification and we want some time, will you just change the terms and like freshen up the loan. So sometimes we do that, and we need to provide the particular details of that thing, like is there any loan being extended, renewed, or fresh loan granted to settle the overdues of existing loan, whatever, like we need to provide all the details of this thing. Whether the company has granted, like F point, whether the company has granted any loan advance in the nature of loans either repayable on demand without specifying any term of repayment. So see, if the company has provided any loan to any person which has no terms on the repayment, right? So like there is no specification like when it will be fall due, what will be the premium, whatever, like no time period, nothing specified regarding the repayment. So we need to check that whether like is there any loan granted, and we need to specify that particular thing in the CARO report order. And we also need to check that is there an amount to being given to related party, because there can be a condition, because like if any company has given that type of loan which do not have the repayment terms, that gives the the chances that company has provided that to the related party to get undue benefit out of that. Coming on the fourth sub point, right? In respect of loan investment guarantee security, whether provision of section 185 186 has been complied with, if not, provide the details thereof. We need to check that whether the related party like whether the section 185 and 186 which are related to related party, we need to check that whether these comply which these details has been complying with this particular these sections. Let's see one more thing. Yeah. Point number fifth, in respect of deposit, see we are clear with the fourth point, right? We need to just check the compliance of 185 and 186 of the Companies Act while providing these loans, investment guarantee security, right? Fifth point, in respect of deposit accepted by the company or amount which had deemed to be deposit, whether the directive issued by the Reserve Bank of India, provision of section 73 to 76, or any other relevant provision of Companies Act are being followed, right? So in respect to deposit, suppose the company has accepted the deposits, and or any amount which are deemed to be deposits. So we need to check, we need to comply with the RBI provisions and provisions in the section 72 to 76 of the Companies Act. And nature of such is there any contravention, like we are not complying with any laws applicable, with the nature of contravention of such to be stated. If any order has been passed by company law board or NCLT, nowadays it is NCLT only, or RBI or any court, whether the same has been complied, it would not, we need to specify that. Whether the whether maintenance of cost record has been stipulated by the central government under subsection 1 of the section 148 of the Companies Act, whether such accounts and records has been made. We need to just check that whether we are, like, for preparing cost records which are mentioned in section 148, is there any applicability, and in the case it has been applicable, we need to just check that we are making it properly or not. Perfect. Cool. Let comes to the point number 7. Whether the company is regular in depositing undisputed statutory dues, including goods and services tax, provident fund, employee. So this point basically talks about any statutory due being, like in the case of state government or central government, whether the company is regular in deposit these undisputed. Basically, here this important thing is this word undisputed, right? So there it talks about the undisputed statutory dues only. Is there any, if there is any disputed statutory dues, we can have, we can delay in payment, making payment, like after the judgment, if it is pending with the ITAT or whatever, like any authority, then it's a disputed, and we are not need to regularly pay that amount, and we can just provide a detail of that disputed amount, that like this amount is disputed at this level of authority, and and this will will pay on the basis of the judgment of the company, the ITAT, right? Whether the dues referred in clause A has not been deposited on account of any dispute, then amount involved and the forum where dispute is pending shall be mentioned, right? Okay, there is one more point. If there any arrear, the extent of arrear of outstanding statutory dues as on the last day of financial year concerned for a period of more than 6 months from the date they become payable shall be indicated. Suppose on the last day there we have some arrears of the undisputed statutory dues which are due like past 6 months. So we need to specify that. Is like, is there any amount on the last day of the year, like 31st March, is there any amount which is being pending for the more than 6 months from the date it become payable to the authority. Come on the point number 8. Whether any transaction not recorded in the books of account has been surrendered or disclosed as income in the assessment under income tax 1961, right? Is there any like, is there any unrecorded undisclosed transaction which we being disclosed to Companies Act? We need to specify that transaction and details, right? Coming upon the point number 9, whether the company has defaulted in repayment of the loan or any other borrowing or in the payment of interest to any lender. If yes, the period and amount of default reported as per the format below. We need to just give that, is there any default been committed by the company in repayment of the loan taken from any person other than, like, any person, from any person. Whether the company is declared willful defaulter by bank, whether the term loan has been applied for the purpose for which loans were obtained. Like if we have taken loan for the particular purpose, like suppose for the working capital, then the proceeds should be used for the working capital only, right? If not, the amount of loan so diverted, the purpose for which it is used may be reported, like whether fund raised on the short term basis has been utilized for the long term purpose. If yes, the nature and amount to be indicated. Whether the company has taken any fund from any entity person on account of or to meet the obligation of its subsidiary, associate, joint venture. If so, like sometimes what happens, like subsidiary companies is not in a very good financial condition, it is having some debts and that need to be paid, and does not have the that revenue, and like it does not have the finance to pay that repayment, the repay that particular debt. So sometimes what happens is, like, holding companies comes forward and like it provides the finance to that subsidiary to repay that. So we need to just check that is there any help being done by the holding to subsidiary by taking any funds from the entity or any person to meet the obligation of subsidiary, right? We need to provide the details thereof with the nature of such transaction and amount in each case. Whether the company has raised loans during the year on the pledge of securities held in the subsidiary. So, if so, give the details, right? So it's like company has taken any loan on the by pledging the securities held in its subsidiary. So we need to provide that details, right? Coming upon the 10th point, whether the money raised by the initial public offer or the FPO, including a debt instrument, during the year applied for the purpose for which those raised, if not, the details together with the delay or default or subsequent rectification, if any, may be applicable, be reported. We have already discussed that point in the sub point of this, like last second point. Is there any a money, if in the case whether the money has raised by the initial public offer or FPO, when that being applied for the purpose for which it is raised, right? And is there any default, delay, whatever it is, it should be reported, right? Coming upon the B point, whether the company has made any preferential allotment or private placement of share, convertible debenture, fully, partially, or optionally convertible during the year, and if so, whether the requirement of section 42 and section 62 of the Companies Act has been applied, right? Company Coming upon point number 11, any amount, whether any fraud by the company or any fraud on the company has been noticed or by reported during the year. If yes, the nature and amount involved in is to be indicated, right? Whether any report under subsection 12 of the 143, so this is the fraud reporting, has been filed by the auditor. This has been done by auditor in form 884 as prescribed under Rule 13 of the Companies Act, auditor and auditor rules 2014 with the central government. So like in the case company is the company auditor has noticed any fraud being conducted on the company or by the company, and is there any report he had made in the subsection 12 of section 143 of the Companies Act, and all he has filed any 884 form to provide details of fraud to the central government. Whether the auditor has been considered whistleblower, if any, received during the financial in the year by the company. Whether the okay, perfect. Let's come to the point number 12. Whether the Nidhi company has complied with the net owned fund to deposit in the ratio of 1:20. So we need to any time in the year Nidhi companies are need to maintain that 1:20 ratio, that is net owned fund to deposit ratio, to meet out the liability. Second point, whether the Nidhi company is maintaining 10% unencumbered term deposit as specified in Nidhi rules 2014 to meet out liability. Whether there are any default in the payment of interest, deposit, repayment, details thereof. Whether the all transaction with the related party are in compliance with section 177 or 188 of the companies. Perfect. Let's come to point number 14. Whether the company has an internal audit system commensurate with the size and nature of business. Whether the reports of internal auditor for a period under audit considered by the statutory auditor, we need to check that. Point number 15, whether the company has entered into any non-cash transaction with the director or any person connected with him, and if so, whether the provision of section 192 of the Companies Act had been complied with. We need to provide a detail of any non-cash transaction. Like sometimes what we do, we sometimes get some assets, and we just issue our equity, or we do a transaction in kind, like I'll take your motorboat, you take our car. So this is a non-cash transaction, and there's sometimes the issue in this transaction is like measurement. So in the case company can what company can do is like it can hide the amount. Like if it's a monetary transaction, the amount is like fixed. Like if you are receiving $20, then it will be $20. But in the case we are receiving or paying any asset or anything which is in kind, so it's not it's not we are not easy. We can't easily get the fair value of this asset being given or taken. So it like we need to be very much careful while auditing these not non-cash transaction. So here the central government wants the auditor to check the compliance of 192 section 192 of the Companies Act, and to check completely the non-cash transaction with the director or any person connected with him. Coming upon the point